Basically, what I'm saying is that whenever there is a dollar panic, and because the dollar is explicitly a gold derivative now, even though statutorily it's not, but functionally it is because of the regression principle. And if you've heard me speak about that before, you understand. Then once the trust in gold goes, the rush to silver begins. We've seen it 3 times. We'll see it again. Exactly when, we don't know, but the point is, what's the endgame ratio? The endgame ratio is the 15-to-1 gold to silver ratio. That is a monetary panic. No matter what the dollar numbers for these metals are, once they're 15-to-1, that's the bell. That's when you got to start spending.
The new year could become the year of metals with a focus on gold, silver, platinum, copper, and aluminium. In precious metals, we believe the prospect for lower real yields and a reduction in the cost of holding a non-interest paying position will support demand, especially through exchange-traded products where investors have been net sellers for the past 7 quarters. Industrial metals stand to benefit from supply disruptions, industry restocking as funding costs coming down, and continued demand growth in China offsetting the rest of the world's weakness. This will, not least, be driven by the green transformation, which will keep gathering momentum. In some cases, replacing demand for copper and aluminium from traditional end users who could suffer from a weakening economic outlook in 2024. Now, we'll show you more clips of the latest interview, but first, like and subscribe to the channel to let us know that you like the video. Watch the video to the end to get the most out of it. Enjoy the video.
Functionally, right now, it is not a monetary metal. I'm not arguing that people actually use silver as money. But the analogy that I use is, and I have this on my Substack in an article called The Myth of Silver Demonetization. Imagine you're on an airplane, how they train astronauts in a zero-G environment, right? They put them in airplanes, and then they nosedive the airplane or make it go down really fast at a sharp angle, and then it's like 0G in the airplane. But why is that? Because everything's falling just as fast as you are. So is there gravity on the airplane? Yeah. Does it feel like there's gravity in the airplane? No. So does silver feel like it's a money? No. But is it actually money? Yeah, it still is. And there is proof of this. Because 3 times since silver was demonetized in 1873, 3 times since then it has returned to the original bimetallic ratio with gold, which was 15.5 to 1, something between 15 and 16 to 1 historically. I don't remember the exact number, but 3 times it's happened. Right, in 1919. Post World War I, it happened in 1968 when the London gold pool fell apart, and it happened in 1980 when there was a dollar panic. So that means a 15-to-1 ratio means that the public is returning to silver as money. And why would that be? Well, there's really no need for silver when you have a functioning gold derivative. Let's say that we had the perfectly honest Federal Reserve or whoever to manage the dollar, and they printed it one to one at a constant ratio with the gold that was mined, and everything was 100% honest and perfect, right? So then there would be no need for silver as a monetary metal at all. You could just use the dollar derivative, the gold derivative. But when the people start to suspect or understand, that the gold derivative is not honest anymore, then yeah, they will buy gold, and they will also buy silver, because if a gold derivative doesn't work, you're gonna need silver for retail purchases, because gold coins won't work. And I'm not saying that it's like the average grocery shopper, retailer or grocery shopper says, "Oh, well, I have to buy silver now." This happens in the plumbing, in the deeper recesses through the Fed's balance sheet. But
silver prices are down on Monday, primarily due to a stronger U.S. dollar and fading expectations of an early Federal Reserve rate cut. The price drop reflects reactions to last Friday's robust U.S. non-farm payrolls report, which impacts broader market sentiment regarding the Fed's current policy. Spot silver is trading at $23.04, down 0.67%. This decline is in tandem with a rise in the U.S. dollar index and treasury yields, both influencing silver's affordability and attractiveness. Beyond the immediate labor market data, silver has faced challenges for weeks due to competing investment flows into cryptocurrencies and equities. The labor market's robust performance, demonstrated by a surge in hiring during December, has shifted market expectations significantly. The likelihood of the Federal Reserve implementing a rate cut in March has decreased to approximately 64%, down from a high of 90% in late December. This shift is of utmost importance as it directly influences the investment strategies of individuals interested in precious metals such as silver and gold. Looking ahead to upcoming economic reports, investors are currently closely watching this Thursday's U.S. Consumer Price Inflation Report to gain further insights into the Federal Reserve's future rate decisions. The anticipation of this report, combined with the current economic landscape, is placing downward pressure on silver prices. Now we'll show you more clips of Rafi Farber, but first, subscribe and turn on notifications to keep us motivated to bring you more videos like this. Enjoy the video.
That once we reach a 15-to-1 ratio again, not exactly 15-to-1, I'm not saying wait for that number and then spend everything, but once we get closer to it, like 25, 20, you should start spending. At that point, I don't think the dollar is going to be acceptable in commerce, really. Maybe in the same way that maybe a peso in Argentina is acceptable because someone's going to exchange it immediately for dollars. Like a dollar might be acceptable because somebody who's going to accept it is going to exchange it immediately for silver. But you'll want the silver directly. So yeah, it's not like you were going, the point isn't to buy silver at, let's say, $25 and then sell it at, I don't know, whatever, 300, whatever it's going to be, and then take the dollar profits and then you're going to be rich, right? That's not going to be the environment. The environment is going to be when nobody wants dollars, so who cares about what dollar profits you're going to make? You want the stuff so you can buy things for your life, right? We're not going to be exchanging them back into dollars. We're going to be buying things with them because they are money. So then what is the most recognizable form of money? It's probably going to be constitutional 90% junk silver because people will still recognize dollars. They'll recognize half dollars, quarters, dimes, those kinds of coins, American. I mean, if you have junk silver of your local country, then probably if I know in Australia they had silver coins until 1966, so you want to get those, and those have very low numismatic value, which I think is good for spending money because numismatics are basically art, and there's nothing wrong with art, but you're not going to be buying food with art. You're going to be buying food with money, and so I would get away from numismatics. If you collect them, that's fine, but I know you're collecting art. And bullion coins, preferably of your country, but I'm sure that 100% bullion coins of any nationality will work in an emergency. I don't think it's going to be that much of a problem.
No.
What do you think of today's episode? Do you agree with Rafi Farber and his point on the importance of silver in a barter economy? Are you stacking more gold and silver at this prices? Or on the contrary, are you getting more Bitcoin? Maybe you're a seller. Let us know in the comments section down below what you are currently doing in the market. Thanks for watching the video till the end. We hope that you've learned a couple of things over the commodities world, and I see you on the next one.